The fact is that most order blocks are a complete waste of time and money. So if you want to filter out 95% of them and only find the best ones to trade, then this is the video for you, because I have 3 simple rules that are going to help you weed out all of the bad order blocks and only trade the most profitable ones. So if you're new here, my name is Justin Bennett, Forex trader since 2007, full-time trader since 2011. And as always, all of this is for educational purposes only and not financial advice. So looking at the EURUSD 1 hour time frame, this is my time frame of choice to identify directional bias and also find order blocks. So looking at the euro, let's run through what an order block actually is, then we'll get into the 3 rules. So an order block is simply a block of orders. Now, more specifically, it's an area in the market where you get a reversal. Okay, so this black candle right here, you get the reversal. On this white candle, you get a lot of large buy orders coming into this market, and that is an order block. Now, the order block here specifically is actually the black candle and not the white candle. Okay, so if you want a simple one-liner for an order block, it is the last opposing candle before displacement, okay, or before an impulsive move like this. So what we have here is this order block right here, okay, so this black candle from the open price down here to the low. And in the case of a bearish order block, which would be from a white candle going into black, it would be the other way around. So it would be from the opening price to the high. So this is the area that we want to focus on here. It's not this white candle, it is the black candle, okay? Now, that's what an order block is. However, the issue here is that if you start to identify order blocks on a chart, even on a 1 hour time frame, you could have multiple order blocks in a single day. In fact, you could have 4, 5, 6, 7, order blocks in a single day on a chart. So the question is, which ones do you trade? And this is where the 3 rules come in, okay? So the very first rule for an order block, let's draw this out, let's write this out, and then I'm going to get into what exactly that looks like on the chart. So rule number 1 is that it must trigger a break of structure, okay, or a change of character. So very simple, right? We have to have displacement from the market in order for it to be a valid order block. Now, looking back here, let's take a look at this price action, and I want to clear something up here in this video, even though it's not about this topic. This is important for identifying the best order blocks. So looking back here, you can see that we had these 2 highs on the euro. Now, what happens a lot of times is traders will look at this right here and they will label this as a break of structure. And I'm going to show you why this is incorrect here in a moment. But what they would do is they would label this a break of structure. We got the close above, and they would be trying to buy through here. Now, obviously, those traders would have most likely been stopped out on this move. However, I'm going to show you why this was never a break of structure up here to begin with. And that's the case because this low right back here, so this low is not an external low. This is an internal low, and you can't have a break of structure off of internal structure like this. Okay, and the reason I know that this is an external low is because we never took internal liquidity. So look at it this way. The only way that you can have an external high or low is if it takes internal liquidity. Otherwise, there is nothing external about it, right? You have to consider that the only reason we call it an external high or low is because it's done something internally. And this right here didn't do anything internally, right? It didn't take any internal liquidity. And so therefore, this is an internal low. Now, if we had made this high, okay, and then come back here and taken out this one here, right? Then you could potentially have a new external low down here, but we didn't do that. And so in this case, notice what happened over here. We had internal low here, liquidity building below this. And then we took that liquidity, and then that was our external low. So I just want to explain that here for purposes of this video as well, just because I'm sure I would get questions on this if I didn't explain that. So this technically up here is our external high, right? Now over here, we did have a confirmed break of structure. Okay, so this was a BOS here. And you can see where this right here, this leg higher was the cause of that. So this order block down here triggered a break of structure. Okay, so this right here was our order block, as we mentioned. We had this leg triggering that break of structure. Okay, it doesn't have to be the order block itself doing it. It doesn't have to be the next candle or even the second candle or third candle. It just has to be within that price leg triggering that break of structure or change of character, which in this case we certainly did. Okay, so that is rule number 1. Now, rule number 2 is going to be that you have to see displacement, or in other words, you have to see a fair value gap. So one thing that traders struggle with is, how do I know it's displacement or not? And the simple answer is, did it create an FVG, a fair value gap? Okay, so in this case, you can see that off of this white candle here, we have this high over here. This was clearly an FVG. Okay, now if you missed my video on fair value gaps, I will link to it at the top of this video, so you can go check that out. But this right here is an FVG, and it has to occur, for me at least, it has to occur on the very next candle. Okay, so it can't be somewhere up here. It has to occur off of this high right here. And in this case, it did. Okay, so this shows intent. This shows intent to move higher. So let's go ahead and update our rules up here. So rule number 2 is going to be that we have to trigger, okay, so must trigger an FVG. All right, so very simple. Must trigger a break of structure or change of character. Also must trigger a fair value gap. So we have both of these here. Now, the third one is also simple, so I'm just going to go ahead and write this out now. Rule number 3 is that it has to be unmitigated, okay? So it must be unmitigated. Now, that's a fancy way of saying that it can't happen twice, so you can't have the market coming into the order block twice. The moment that it hits that order block, the effectiveness of that order block is gone, right? Because you have to consider that the reason order blocks like this work and the reason markets tend to revisit them is that you have orders, okay, the market moves so quickly through here, and you typically have fair value gaps like this, and this is what makes an effective order block. You have orders that build up through here. However, the market moves so quickly through here that you have orders that did not trigger back here. So you have to think about it in terms of once the market revisits this area, the effectiveness is over because now those orders are being induced. Okay, so those are the 3 rules. Now, let's walk through this example and see what we get here. So we have our fair value gap over here. We have an order block, valid order block. We have the fair value gap. We have the break of structure. And so far over here, it is unmitigated. We have not seen the market come into this area. Now, right here, you can see where we do get the market moving within this. And it just so happens that that was the low. Okay, so this actually triggered a new external low. And again, just for example purposes, this is our new external low. And we could have identified this even before we had the break of structure up here, simply because notice what happened again, internal. We had liquidity building below here, and we took that liquidity and then we moved higher and broke structure. So this is our new external low right there into that order block. Now, in this case, okay, this back here is, I'm going to actually put a label here and call this external because this was an external order block. Okay, so order blocks can technically form externally or internally, which I'll show you next. And personally, and a lot of traders might disagree with this, but for me, I've actually found a lot of success with internal order blocks, and I'll show you exactly why here in a moment. Okay, so this right here was our external order block, and it played out beautifully, right? We had the fair value gap, we had the break of structure, it was unmitigated up until this point right here. So, really nice order block. Now, this was our external low down here. We had a new external low over here, and what you'll notice is that through this internal price action, we once again have an order block here at the end of this consolidation. Okay, so this is an internal order block, which I'll mention in a moment. So what we do here is we take from the opening price here, down here to the low. Remember, we take the low here because this is technically a bullish order block, okay? So we take from the low. Now, if we drag this over, you can also see where this once again triggered a really nice reaction right here. Now, why is this internal? Okay, why is this internal? It's internal because, as I just mentioned, this low right here is external because, first of all, we took internal liquidity, okay? So we took this internal liquidity back here. We had the lows building through here, liquidity building below them. We took that liquidity and then we had a break of structure over here. So let's label this out just to keep things nice and clean. Okay, so off of this high right up here, this was our external high. We had a new break of structure right here. Okay, so this over here was technically an internal order block because notice on this pullback, right? All we did was just build liquidity below here. We didn't take anything. If we had done this and then taken it like this, then that could potentially be our new external low. But we didn't, and so therefore this is an internal order block. Now, the reason that I found more success with these through my trading is that if you'll notice here, okay, so this one right back here, if you look from this low right down here, this external low to the external high. So we're looking from this low right here up here to this high. So I made a video on OTE, and I love it as a tool. I mean, I love it as a tool for finding, pullbacks within a trend. And I will also link to that at the top of this video too, so you can check that out. But the bottom line is that OTE signals from 79% to 62%. And you can see they're right here in this area. Okay, so again, from external high, you can see that we actually dipped a little bit below this, okay? Now, the one issue with external order blocks that you have sometimes, and this is an exception because this was so large, but what you'll often find is that with external order blocks, they often don't trigger in really strong trends because if you think about it, right, what makes an uptrend or a downtrend? You get higher highs and higher lows. So even something like this, if you have order blocks that are building, down here in this area, right, you'll notice that the market never taps into this. Same thing over here, right? You get the pullback and then the move higher. If you had an order block down here, the market never taps into this. And so the challenge with those external order blocks is that you're often not going to see the market actually hit those areas. And so therefore they become a little bit useless, if you want to call them that, because you never actually see the market tap into that area. Whereas internal order blocks, you do get the market actually testing them quite often. However, the same rules apply, right? We need to have the break of structure. So notice right here, right? This was our external high. This was our internal order block. On this leg, we absolutely broke structure here. And you can also see where we had a fair value gap form off of this high. So that also satisfies this rule. It was unmitigated up until this low right back here. So this was ideal because if you notice here, if you take your fibs and you go from the external low down here up here to this high, right? Notice where the OTE sits right here. This was the upper band of that OTE right there at this order block. So this is a textbook example right here of how an internal order block can really help you to identify areas of interest and just add some more confluence to them. Now, I want to show you something over here with regard to the current price action here for the euro. So I'm going to remove our rules over here with us just so we can keep track of this. And if we go over here to, this is actually the recent price action here for the EURUSD. Now, at the moment, you can see where currently we do have an external low right down here. And as I mentioned in a recent video as well on this, like this was the external low down here. This is the external high. The reason that this right here is not the external low, or this even, is because first of all, we haven't had a break of structure of this. So therefore this is not the external low. This over here, we didn't sweep any internal liquidity. The same thing on this. Okay. And this is where a lot of traders go wrong, because if this had done this, where we pulled back, moved higher, and then pushed down and taken this liquidity, then that right there would be your external low as long as we form a break of structure, but we have not done that yet. We did do it here, but the key here would be to take out this high now. So anyway, this down here is your external low. This is the last confirmed external low up here to this external high. Okay, so right now for the euro, if you notice back here, this is actually very similar to this order block that we had, this internal order block that we had back here. However, the one thing about this though, and I wanted to point this out because details like this matter, is that if you notice this candle right here, okay, so this black candle right here, this would technically be our order block. So from the open price down here to the low, that would be our order block. However, if you'll notice, there's one thing wrong with this. And, we have everything going for it, right? We technically had an internal break, right? However, we can't necessarily say that we broke structure because it's an internal price action right here, internal low. But the one issue with this immediately that I see, even without looking at, whether it was a BOS or not, is this candle right here, this wick. So this wick right here tapping into this area invalidates this as an internal order block, at least for me, because we've already mitigated this. So as soon as we do this right here, this for me is off the table. Now, it doesn't mean that this low can't trigger a bounce from here, but as far as an order block that I would pay attention to, this one right here is not it, because we've already mitigated that. And so therefore that is off the table for me. So I wanted to show you that, but hopefully guys, these 3 rules are going to help you weed out probably about 95% of order blocks out there and only trade the best ones. Again, for me, it's going to vary from trader to trader, but for me, I found a lot of success with those internal order blocks, especially when they line up with that OTE. So if this video helped, be sure to subscribe to the channel because I have videos coming out like this one every single week. And if you want to get your hands on my exact SMC trading strategy, check out this video right here. Until next time, trade well out there.